all buyers knew before jumping into this kind of purchase?
That it's not simple, it's not glamorous, and there will be problems along the way.
There's a lot of additional costs that can be very tricky for a developer.
It certainly can, especially in Greater Victoria, because we have 13 unique municipalities here.
Fourth guy, say yes. How do you deal with that?
Those are tough situations
Yeah.
because you can't force anybody to, unless you're expropriating.
They all have the same for sale sign, and on the bottom they say Land Assembly. What does that mean?
This group of properties together, these landowners decided that perhaps this area is prime for development, and we feel that if we get together and sell these properties together as a whole, we might be able to achieve more money.
Will they anticipate all being sold at the same price?
That's a much more complicated question because you have the duty of confidentiality.
Land transfer tax is what?
Land transfer tax is the privilege of buying property in this province. One thing about governments is they like to spend money, and they spend more money than they bring in, so they're always looking for new tax. And, it might seem overwhelming, but at the end of the day, it's actually probably really worth it.
The Red Chair Podcast. Real truth behind real people in real estate.
Well, hello and welcome again to the Red Chair Podcast. My name is April and I'm your host here today. We're so happy that you've continued to join us on this podcast journey. I hope you have been finding our sessions, helpful. Maybe this is your first session, and so I'm very excited that you're with us today. If you take a second to click the subscribe button, we would love to have you join us so that you can get additional podcast episodes moving forward. So let's get started. So today's conversation is really around investment properties and land assemblies, which sounds like I don't even know what that means. So we're going to learn a lot today from our guest, who's sort of a bit of a specialist, I would say. Maybe not a specialist, but someone who really knows a lot about these types of properties. With me in the red chair today, I have Matthew Walsh. Welcome here, Matthew.
Thank you.
Thanks for joining us. I know you are a busy realtor right now. This market is crazy.
It is.
And you are like literally running between, being at the lake and then being at a septic inspection and then being on a podcast. I mean, it's just a lot,
and
right?
Throw 3 kids in the middle of it.
And throw 3 kids in the middle of it, and summer break and all of those things. So
lots of fun.
So we're so glad you've joined us today. So Matthew, can you tell us a little bit about, your real estate experience? What's your background? Just so we kind of lay the land here. And who are you? Yeah.
So I started my journey in real estate back in the early 2000s when I bought my first investment property, actually, and did a renovation and had it tenanted and sold it. So that was kind of my first taste in it. So I decided to get a little bit more into real estate. So I started taking UBC real estate courses in real estate appraisal. So I did that and acquired my diploma of urban land economics and became a residential appraiser, designated residential appraiser. And so I spent about 16 years after doing that working in expropriation. So helping people understand why they wanted to give the property to these major projects in highways and pipelines and things like that. So I spent about 16 years doing that. I traveled pretty much all over kind of the lower mainland out to Coquihalla Summit, just dealing with landowners for related right-of-way issues.
Right.
And so then I had 3 kids in the middle of that and decided I didn't want to travel anymore.
Yeah.
So ended up making a decision to come back home to Victoria and just stay here, stay put with my kids and sell real estate.
Fantastic. And so how many years have you been selling real estate?
We're coming up on 4 years now.
Okay. So it was like the next logical step, really. I mean, all this background in expropriation and all these types of things, real estate would be a super easy fit. And of course, now you're a managing broker at Royal LePage as well. So that's a whole other hat, a whole other
totally
arena.
Is.
Yeah, that's great. And we love having you. You're a very big asset to our company. So
thank you.
Yeah. So we're going to talk about a couple things: land assembly, investments. And I think this is really geared for the consumer that is, maybe they're already a homeowner, maybe they want to, kind of make their portfolio larger in terms of real estate through investment properties or, helping, or maybe they have a house that they feel might be a part of a land assembly. So we're going to kind of touch on some of those things. We're going to ask you some questions. We're going to do some quick fire questions, and we'll, it'll be great. You're going to be great.
All right. Sounds good.
So we're going to start sort of with land assembly and why it matters. Can you just start by, I'm a consumer. I'm driving down the road and I see 4 properties in a row. They all have the same for sale sign, the same broker. And on the bottom, they say Land Assembly. What exactly is that? What does that mean?
So what a land assembly is that this group of properties together, these landowners decided that perhaps this area is prime for development. And we feel that if we get together and sell these properties together as a whole, we might be able to achieve more money for our properties than if we just sold it to, Joe and Nancy down the street.
Right.
So they get together, they talk to a real estate expert in land assemblies or in commercial or a developer realtor and say, we really think this is a good development area or location. And they decide to put it up for sale together so that they all have to be sold together to a developer.
Right. So just for instance, you're having a barbecue with your neighbors and you're saying, this is it's a prime area for redevelopment. Our homes are older. Maybe we should talk about this.
Totally.
That can happen. But maybe also a developer or a commercial agent is going to come and knock on the door.
More than likely, the way these get started is one realtor will knock on the door and say, this area is prime for development, or we think development is moving this direction. How would you feel about it? And then that gets the neighbors talking to each other, and that's when the backyard barbecue comes together and they go, okay, well, maybe we should do this. But it usually starts with that realtor or developer knocking on the door, sending a letter saying, we're looking to acquire properties in this area.
Right. So sort of that getting started piece is likely a door knock. Will the realtor or developer knock on all the doors?
It depends.
Okay.
It depends on the realtor. But yes, typically they'll go on an entire neighborhood or target an entire area to either send out letters to all of them and then knock on the door is typically what's going to happen for a lot of people. They'll blanket the area saying, we think this is a good location. Someone might call them and then they would go and canvass the area by knocking on the door.
Right. And I'm probably getting ahead of myself here, but I'm just morbidly curious. Let's say there's 4. Mm-hmm. Will they anticipate all being sold at the same price? Or how does that work?
Well, that's a much more complicated question because you have individual relationships as a realtor with each individual landowner, and you have the duty of confidentiality, so you can't always have those things sorted out completely. You're going to have to, because you're representing all of them separately, typically, you kind of have to look at what this person needs to get out of the property and put it all together to the point where it's attractive to a developer.
Right, because they all have different motivations.
They all have different motivations, all have different needs. One member of the assembly to make it work might need a little bit more because they need this. Someone else might need a little bit less and they'd be comfortable with it because their house might be smaller. So it's not always just black and white.
Yeah. I'm going to come back to that in a few minutes because I've got a couple of other questions that I think are key about that. But so we're talking about, a land assembly could be, can it be 2? Or does it really have a specific number in mind?
It can be, the minimum is 2.
Okay.
2, by definition, land assembly is 2 properties, 2 or more properties coming together. So it all depends on the size of the properties and what the development potential of those properties are.
Right.
So depending on what that area or what the particular municipality is looking for in that particular area.
So if you were a homeowner and you thought that you had a property that would be, considered for something like this, what would be some of the key things that would indicate that this might be a good prime location?
Typically close to urban centers, you see construction going on around you, you see road improvements happening, you see infrastructure stuff going in. Typically a good indication that things are kind of happening in that area.
Right. Okay, so this is a little bit because this happens and, I think this is really probably a good thing to point out. So you've got 4 and they all have different motivations, or maybe you've got 3 of the 4. And so you've got the corner and the next guy says no, but the third and the 4th guy say yes. How do you deal with that?
Those are tough situations because you can't force anybody to, unless you're expropriating, then maybe you can do that. But in this case, you can't do that type of thing. So you have to work with them. You have to find out what motivates them. And sometimes it is people have lived there for 40, 50, even 60 years. And sometimes you just have to wait.
Yeah.
At the end of the day, it does turn over.
And that's hard because if you are really highly motivated to get it gone, like let's say you're relocating or, you have found the dream home and you're getting out of this place, then this is not even an option all of a sudden because
It might not be.
Yeah.
Might not be an option. It depends on the speed and how quickly you need to or you want to move.
Yeah.
Not need to, but want to move.
Right.
And sometimes in this particular market, it's a little difficult right now for developers. There's not a lot of money in it. There's various factors as to why, with interest rates and municipal fees and government fees and all that type of stuff. But sometimes developers will look at land banking. So they will pick up those 3 properties and leave that one until the end of the day if they have a long-term goal.
Okay, let's talk about that for a second. So land banking, that's an interesting word. So this is a scenario where we've got those 4, but the next guy says no, the 2 say yes. So the bank says, okay, I'm going to buy the 3 and wait for the 1.
Yeah, so the developer.
The developer. So that happens.
Oh, can happen.
Oh, wow.
It's not happening so much right now,
Right.
but when the markets are starting to get really, like when we're on an upswing,
Yeah.
you'll tend to see a little bit more of that. And they'll have, especially if they're decent houses where they can, get some kind of rental income from them and have them taken care of.
Yeah.
You'll see that happening a bit too. A little harder right now.
Right. Okay, same scenario, 4 houses, corner says no, and the next 3 say yes.
That's actually probably an easier situation as
Okay.
long as the municipality feels that they're not orphaning one property. Sometimes if you're orphaning a property, the municipality will say, no, we can't approve anything until that one's there.
Right.
But if that could be part of another assembly on another corner,
Let's say the street goes down the other way and maybe they can do that.
Then it could work.
So things like that are considerations that definitely the developer is looking at,
Absolutely.
right? They're going to look at that and say, well, that's not viable or that's going to cause more headache with permitting and whatnot. So, we're going to have to not do that. So really there's some strategy to how that all plays out.
Absolutely.
So, yeah.
Yeah.
Interesting. So, okay. So if someone was considering that, let's say the house on its own, it's a 1950s build, it's a rancher, like good bones, but probably not going to get over $1 million for it. So let's say it sells for $900,000. In a land assembly situation, is it selling for $900,000 or is it selling for more?
It's hard to pinpoint that right now
Okay.
because you don't know what the market conditions are going at the moment.
Yeah.
Right now, we're not seeing a huge amount of lift between what a developer will pay and what a retail person will pay. And that's why you're not seeing a lot of land assemblies flying off the shelves at the moment.
Interesting.
Just because in the past, developers could make up any shortfall in the construction costs with getting the land at a particular price because land kept going up. We're in a scenario right now where the land is not accelerating in value as much as it has in the past. I mean, it will return one day because we're on it's a cyclical market. It'll go up, it'll kind of plateau, it'll go up again. But right now we're sitting kind of in that plateau-ish area.
Right. And for developers with the cost of, materials going up, I think likely there are permit issues as well, municipality to municipality. So there's additional costs that I feel like there's a lot of additional costs these days.
Yeah.
And so that can be very tricky for a developer.
It certainly can, especially in Greater Victoria, because we have 13 unique municipalities here, and they all have different goals, all have different aspirations, all have different councils.
All have different timelines.
Absolutely.
Of how quickly they get back to you.
Some are, I don't want to deal with you. Some are, let's get going. And there's a mix in between as well.
Right. So is there ever a case, I'm very fascinated by this, is there ever a case where one of those homeowners decides, well, I'm actually going to see if my neighbors will sell me theirs, and they're going to develop it themselves? Is that an option?
Absolutely. If your neighbor wants to sell out and you're waiting for a future development, you could absolutely do that. Yeah.
So you could buy it with the intention of, selling it to a developer eventually, or, if you're so inclined, you could develop it yourself. I suppose if you hired a builder and
you could take it down the road of rezoning.
Yeah.
Look at what is and take it through to rezoning so that then it's already packaged deal for a developer down the road in the future.
And of course, with all of these things, I think our legislation, I think our bills that change, the way things are permitted and zoned change so frequently. So, if it's 2025 right now, but if you're watching this podcast next year even, or 6 months from now, it could be different in the municipality that you're in, correct?
Totally. I think in the last 2 years, there's been, I think, 14 legislative changes when it comes to real estate in the province of BC.
Bit of whiplash, for sure.
Yeah, and then the municipalities are also making changes. In fact, every municipality by the end of 2025 in BC is supposed to update their OCP. And their OCP is the official community plan. So it's actually the document that drives what should be happening in the municipality, or what their vision of happening in the municipality is.
So OCP stands for Official Community Plan.
That's right.
And what does that outline?
That outlines where the municipal government is indicating where their growth is, where their parks are going to be, where their recreation sites are going to be, where their downtown or village cores or anything like that. So it kind of outlines what it's kind of the roadmap for what they want to see in the municipality.
Right. And where could a consumer get that information?
Every municipal website will have it on there. Yeah, so you just go to any District of Saanich, District of Sauk, City of Victoria, they'll have the OCP available. And as I said, like the provincial government has mandated by the end of 2025 that they all update these documents and then update them every 5 years. So it's a big undertaking.
Yeah, that is huge. Yeah. Okay, that is super helpful information. Okay, so that's a lot. I kind of felt like that was really good in terms of like getting kind of a really good overview of land assemblies and how you would handle them. So let's kind of move the conversation on to investment properties as well, because there's different other forms of investment properties. So can you kind of highlight what those might look like in terms of...
Well, any property purchased for the purpose of either making money, gaining wealth, or increasing value is an investment property.
Right.
Unless it's for yourself to live in for your own personal use, then it would be an investment property. And that can range from anything from a condo to a house to a commercial building to an apartment building. Any of those could be an investment property.
So what are the most common first investment property types?
Usually it's going to be a condo.
Okay.
Because the barrier for entry, or the cost, the price point, is usually what people are going to look at, because they're easier to qualify for mortgages and things like that. And then they're fairly easy to, I shouldn't say easy to rent, but they're fairly easy to find tenants for.
Right. So you purchase a condo and maybe you live in it for a while, and then you kind of upsize to your next property and you keep it for...
That could be an option. And that's one of the things I did personally, actually. Yeah. But some people will get to a point where maybe they've paid their car off and they have this extra money that they want to say, hey, what can I do with it? And real estate's a good option for that type of thing. Yeah. Because you're usually pretty stable in values, where, a car or something like that tends to be depreciating. Yeah. Typically, real estate appreciates.
Yeah. So with condos too, I think one of the things you have to consider is strata fees, right? And so, I think if your first investment is a condo, considering the strata fees, any potential, levies that you might have to be responsible for down the road, if those condo fees go up over time, how you charge rent to ensure that those strata fees are covered. Those are things you're going to need to think about.
I'll come at it from a different angle. Okay. So strata fees are managed by the strata in order to maintain the building, to make sure that things are updated, make sure things are taken care of and repaired. The single family house that you buy as investment property, who's doing that?
Right.
So there's a cost involved. It's just not a mandated monthly fee, but a roof goes bad, it's on you to replace.
Yeah.
Whereas in a strata, you have everyone else who owns in the building also participating in those maintenance. Where in a single family house, you don't necessarily have that.
Right.
You've got you.
Yeah. And can be a little overwhelming.
Yeah. When a roof costs you $15,000, $20,000, it can be a lot of money to come up with at once to make that happen. Or a septic, as I was saying earlier, getting a septic done, if you have to deal with that, then there's some costs there that aren't shared with other people.
So other types of investment properties could be things like duplexes, triplexes. let's talk about that for a second.
Mm-hmm.
You know, what would be the benefit of getting an investment property with like multiple units in it?
Yeah. So one of the benefits is if you do have a vacancy, you still have income coming in from those other units. So you have more of a consistent income.
Right.
With a single family house or a single condo, if that tenant moves out, you usually are going to have a month or two that you're not going to have that income coming in. If you have a multi-unit building, you're going to have that consistency of income. Even if you have one vacancy, you still have the other income coming in.
Right. With these units, I know we have more laws in place too, and you know, again, it's 2025, these things could change, but you know, we've had some new laws that have come into play in terms of short-term rentals, and all of those things too. So considerations for people, you know, if they're thinking about doing an investment property, what are some of those considerations that they really need to strongly think about before they get into an investment property?
Well, again, depends on what the investment property you're looking at is, but I would look at if it's going to be like, let's say it's a condo that you're going to be renting, look at the renter pool, look at the area that you're going to be in and what's the demand for those rentals. In Victoria, of course, or is UVic, any condo around UVic, you're going to be able to rent really quickly, really easily. You're going to have good turnover.
Yeah.
A rental condo in maybe an outlying municipality that I won't mention may be harder to rent because you don't have that as big a rental pool for that type of unit. People, when you get out,
you can say it if you want.
no, that's okay. But if you look at like more of an outskirts municipality, people move to those places to save money and get more for their money. So they're not necessarily going to look for a condo in those markets. They're going to look for larger houses. So if you're going to invest in like say a smaller community out west, farther Langford, those type of things, you're going to want to look at probably at houses or half duplexes or things like that, because then families can live there. And that's the reason why they're moving that location, because they can get more for less. Whereas around UVic, you can get a 2-bedroom condo and have the rooms filled like that.
Immediately. Yeah. That's a good point. So I think, you know, really deciding who you want to cater your investment property to, you know, and I think too, like with the, you may have a situation with a family in a home that would want to stay for longer. So you may have better quality tenants, people that, you know...
not that shorter term are not quality tenants.
I'm not saying that. You know, everybody can be great or not. There's lots of stories out there.
You bet.
But in terms of, you know, like guaranteed revenue to cover your expenses, a family in a family home will likely stay for a longer period. Whereas if you've got, you know, a condo or something with students, there's going to be more of a turnover. So you're going to have more responsibility in terms of finding new tenants and whatnot.
And typically the trade-off for that is the more work you have to do here to get the tenants and the turnover, usually the more rent you get, where over here, the more stable of the rent, your rent usually don't increase as quickly.
Right.
So there's that trade-off of what you're looking to do. And so it comes down to, is it about cash flow? Is it about appreciation? And that's the thing you need to decide. If you can figure out that I don't need the cash flow now, I'm saving this for 10 years down the road when my kids go to university and I'm going to sell the property to be able to afford to pay for their college tuition. It's a totally different than needing to have that consistent monthly cash flow.
So really, it's almost like having to sit down and do like a checklist of, you know, the pros and cons of everything and deciding like, I want to invest, but what makes the most sense for me in terms of how much I want to do, how, you know, like.
Not a financial advisor in any way whatsoever, but when you look at things that they tell you to invest in, like your mutual funds through the bank, all that type of stuff, you're putting money into that and hope for appreciation down the road. I feel real estate is very similar and it's very stable. So you're putting money into it to get a payout at the end of the day. It's not about getting cash flow today. It's about, in my opinion, it's about what you get 5, 10, 15, 20 years from now.
That's great advice. Yeah.
So you have to look at your whole financial picture, not just a snapshot of today.
Absolutely. So let's talk about financing for a minute, because it's a big part of it. You know, in most cases, if you are taking advantage of investing in real estate, you probably already own something. Is that true, or is that
Well,
false?
I think that's shifting a little bit, but yes,
Okay.
it's typically been true. But I think it's shifting now because people can't afford necessarily to buy their home for themselves, but they
Right.
they might be able to afford to buy something as an investment property, so that they're building this equity so that they can eventually buy what they want down the road.
So are you saying that they continue to rent?
There are people out there that continue to rent, but buy an
Oh.
investment property because that helps them build equity because someone else is helping pay for that mortgage.
That's an interesting concept.
Yeah,
And very different from many years ago. I mean,
for sure.
in real estate, we always talk about buy as quickly as you can. Real estate's important, and
Big believer in buy. You buy real estate and
But-
wait. You don't wait to buy real estate.
in the good old days, you
Yeah.
bought for yourself, right?
Yeah.
So okay, let's talk about finances. Then I want to talk about some of the implications about
Sure.
doing it that way, because it's quite interesting. So okay, so you need financing.
Mm-hmm.
So for investment properties, does that look different than if you were buying just a property for yourself?
It can.
Okay.
Typically for an investment property, you're going to have more of a down payment for typical everyday financing that you would normally get. Of course, talk to a mortgage broker because
Right.
they would be able to give you more details. But
Yeah.
typically you're going to need at least 20% down for an investment property.
Okay.
And sometimes they want 30.
Are there larger pools of, mortgage brokers, venture capitalists? Like, are there other places more creative that you can get financing from for investment?
Yes, there are. And typically that's why I would talk to a really good investment focused mortgage broker because they'll have access to those other funding sources that are not necessarily standard banks, like
Right.
our typical big five banks or the credit unions.
Yeah.
Sometimes they'll have other investment firms that invest in
Yeah.
real estate for people.
So larger down payment. So what does that look like? 20%?
Typically at least 20%.
Okay.
Yeah.
When you're buying investment property, are there any additional taxes that you're paying on that property?
Not on the day-to-day operation of them that I'm aware of. You're going to pay your regular property tax, you're going to pay your regular insurance, all that type of stuff. But you will pay capital gains tax at the end once you sell the property and you
Okay.
realize your gain. So there will be a capital gain on that because you don't get the homeowner's exemption of your primary residence
Right.
that the rest of us enjoy when you live in your primary residence.
So we'll focus on that in a minute. So in the beginning though, when you're buying it, it's not subject to GST or anything like that, is it?
Well, it depends on the property that you're buying.
Okay.
New construction, absolutely subject to GST. Vacant land, subject to GST. Any commercial venture that you're purchasing or a commercial building could be subject to GST. So always talk to your tax advisor as well. A single family or a residential unit is typically not subject to GST unless the use prior was a GST.
And investment properties are also still subject to land transfer tax,
Yes.
right? Okay.
Can't get around that.
Yeah. And so land transfer tax, if you're wondering if you're a first-time buyer, investment buyer, land transfer tax is what?
Land transfer tax is the privilege of buying property in this province. Because we have the privilege of doing so, the government would like you to pay them to approve or to just basically say, thanks for buying in here. And right now, I think it's for the first 200,000, it's 1%. And for everything after that, up to 2 million, I believe is 2% on the purchase price. And then from 2 million to 3 million, I believe, and I'll have to confirm those numbers, is 3%.
Isn't that nice of the government?
It is. It's a big cash cow to
Yeah.
them. Like honestly,
Yeah.
on a typical property in Victoria of a, like call it $1 million property, you're looking at $16,000 on the 800,000 plus 2,000 on the first 200. I mean, we're talking $18,000 you have to
Wow.
pay for to buy $1 million property,
And
that's
can't-
just the privilege of
And you can't finance that.
no.
No. You have to have that money.
You have to have that.
So you have to have your 20% down and you have to have that additional money. That
That's
is
correct.
outside of the financing.
That's correct.
Yeah.
There
Plus your
are
legal
some
fees and all those
all
things
those
as
other
well.
things
Yeah.
as well. You're
Yeah.
going to have inspection fees. You're
Yeah.
going to have legal fees and all that other stuff. There are some exemptions to property transfer tax for owner occupiers, and there are some exemptions for new construction. They're pretty for Greater Victoria. The new construction one's pretty low value, so
Right.
you don't really get too much of an advantage of it. But
So there is a gift for first-time buyers who have the property transfer tax waived for their first purchase, correct?
Up to a certain amount.
Up to a certain amount.
A certain dollar amount. And I think it is, if I'm not mistaken, is about $450,000.
I think you're right.
And then I think they will give you a partial exemption up to $550,000. So that works for a condo or some condos, not all condos, but some condos in certain areas where you can get into something for less than that.
And it's a one-time thing.
Well, yes and no.
Okay.
It is a one-time thing, but I do believe that there is an exemption after 5 years of not owning property that you may be able to qualify it again, but you have to confirm all of those details.
So if you owned property previously and then stopped owning and a 5-year window has gone by, there is the possibility to have that.
Have to look into it unless they close that, but that they may change it. But that's currently with the current GST rebate that the federal government announced earlier this year. That is part of that criteria if you haven't owned in the previous 5 years.
So interesting on that. So if you're purchasing an investment property as your first one, and it's, let's say, a $500,000 condo, that's your one time, really.
You don't, if it's an investment property that you're not occupying, you do not get the exemption.
Okay, this is what I was hoping to understand. So if it's an investment property, that doesn't count.
Nope.
So do you waive that ability then when you do buy the one you're going to live in?
My understanding is that you are allowed that exemption for your first property that you own and live in.
Okay.
But you'd have to confirm that.
Yeah. Okay.
I know my nephew had that exact scenario where he did buy with his parents an investment property for a period of time, and he didn't want to lose his first-time home exemption. Right. But it turns out when he bought the house that him and his wife live in, it was over the cap anyway, so it didn't matter.
Okay. Yeah. So it's something to consider, for sure.
Absolutely.
I think that's a wise thing just to think about. Like there is this additional piece, and we should consider that. So the other piece to that, then we talked a little bit about capital gains tax. So because it is an investment property and is not your primary residence, when you go to sell it, you are subject to something called capital gains.
That is true.
Okay.
And you also need to make sure you talk to a tax advisor because there are different nuances for it. But if it's just a residential property that you purchased, rented it out, and then you sold it and you gained, there is a capital gain tax on that.
Okay.
If it was a going concern in your business's rental properties, then they might tag you as regular income. So then you don't get the capital gain. You pay regular income on it. So depending on what your personal tax situation is.
Yeah. We're getting really into taxes now.
So, and I'm not a tax advisor, so just make sure that
neither of us are.
Yeah. You need to make sure you
We're
look into that.
We're going to put a big disclaimer there.
Yeah.
Neither of us are tax advisors. Get tax help on these things.
Because it's complicated.
It is complicated, and these are just general broad strokes about the taxation. But the follow-up question on that I have is, let's say it's not an investment property, it is your actual primary residence, and you have a suite in it that you rent out. Is that property subject to capital gains tax?
Up until today, up until the last however many years, the CRA has not looked at that, but there is potential for them to start looking at that because one thing about governments is they like to spend money and they spend more money than they bring in, so they're always looking for new tax revenues. So consider that you have to put into a calculation that they may want a capital gain on the gain on that rental part of your property.
The revenue part of your ownership.
I was listening to something recently where some accountants were talking because, I'm, that kind of guy and want to listen to accountants talk all the time. But there was where
it helps to put you to sleep.
It helps to put you to sleep, yeah. But there was some discussion about how they felt that would have never been an issue 10 years ago. But now, those are things that are starting to come on people's radar.
Yeah. Interesting. Well, that's good.
And that's also to say, like, if you were, because, the short-term rental ban that they've kind of put in place, but if you used a condo when you were allowed to short-term rental them and you go to sell it now, that actually may cause a GST issue for you when you go to sell it.
And these are, these are things that are sort of like specific to BC. So like every province is different.
Well, the GST thing would be across the country.
And I think that's important to point out as well. Like province to province, if you're watching this from another province, you have, we've got federal and provincial hurdles to jump. Mm-hmm. And so, I think it's really important that people just seek the proper, information, and, you get a large portion of that from your trusted real estate advisor.
Absolutely.
But of course, we're going to pass people on to their trusted tax advisor and their lawyer advisor. Like
100%.
there's a number of key people in this transaction. And so, being aware of that is important.
Build your team.
Yes.
Like build your team. Your real estate advisor is a huge part of that.
Yeah.
And they're going to be able to tell you, you need to talk to this person because you need that specific tax advice for you.
Right. So lots of tax things, lots of finance things to consider, larger down payment, different maybe different products that are available for investors, and then zoning realities as well. Again, we touched on it a little bit, but as you're looking at investment properties, there's many different types of zoning, and it's difficult to rezone if you have to. So
yes and no.
Okay.
Depends on the municipality, depends on what they're trying to do. But we touched on the official community plan, or the OCP, previously, which is kind of the roadmap. And the second part of that is the zoning bylaw. So each municipality will have a zoning bylaw, and the zoning bylaw actually outlines what you can do on any one particular piece of property. If a particular property is zoned residential or large lot residential, say, in an area where you can see the path of development's coming, or the OCP talks about it, getting that rezoned or making an application to the municipality to zone that to maybe something more high density or multifamily might be easier than if it was outside of those kind of core areas where it might be more difficult to rezone a property that might not be identified as a growth area.
Right. Yeah.
And each municipality does it differently.
Yeah. So really, I think back to this sort of like idea of a checklist and saying, okay, I need to figure out what municipality I want to be in, what type of investment property I want to purchase, the zoning, the financing, how am I, who's going to live in it, the revenue, like all of these things you really have to consider. It's probably could be very overwhelming for someone, especially if they're new to it.
And that's why having a great real estate advisor can help, because they are going to have contacts with those professionals that you're going to need to talk to.
Yeah.
And, it might seem overwhelming, but at the end of the day, it's actually probably really worth it.
Yeah.
Because the benefits you get, throughout history, the people who ended up being, well off or were able to take care of themselves are the ones that own property.
Right.
So it does make that difference down the road.
Totally. Yeah. And I think, there'll be times in life where you need to access some money because, you've come on tough times or things happen or, you just don't know. And
your car breaks down, your dog needs a surgery, whatever it is. Yep.
And, having that peace of mind, knowing that you've got this additional equity there that you can pull from if you need to, I think, can be very comforting for people, especially as you get older. Like this could be really investing in real estate could be a part of your retirement plan.
I honestly think it should be.
Yeah.
Because they're tangible assets it's one thing to invest in mutual funds or whatever, stocks or things like that, but you don't have any real control over what happens in that company that you're investing in. This is something you have direct control over.
Yeah. And really with everything, whether it's mutual funds, life insurance, all of these types of things, there's going to be money you're going to have to pay out, for, withdrawing the money from funds. So it's the same with real estate. There's going to be commission fees involved to sell. There's going to be capital gains tax that's going to be, but again, at the end of the day, you're going to have a huge lump sum of money that you're able to take with you to, the next point of your life or to pass on to your family as well, which is such a huge thing these days, like the consideration of purchasing properties with legacy in mind for our future.
Definitely.
Because you've got kids, I've got kids, and, my kids are at that age now where they're like, we don't even know if we can live in Victoria when we're ready to buy.
And that's an interesting thing, because what I'm finding some people will do in order to get into the market, and this talks about would you still be a renter and then get into the market, is sometimes friends or other acquaintances can get together and buy a piece of property together as an investment or do a joint venture together to get into that market and get some of that equity and get some of that growth built and still rent a property.
Yeah, fastest way to lose friends.
Well, it can be, but if you're,
but no, you're right. If they're solid people in your life, it can be really, really a good idea.
Because then you're you have more buying power.
Yeah. Totally. That's so good. Okay, so strategy around this in terms of investment properties. We've talked about building a team, having a lawyer and a tax advisor and a trusted real estate advisor. What advice would you give a buyer who's like ready to take the leap but doesn't know where to begin?
The first advice is
step.
to talk to a real estate advisor that is investment focused
Yeah.
or is development focused and find out from them what their thoughts are and how they could help them get to where their goal is going to be. Because that's the number one thing. You need to know what you're looking at.
Yeah. And not every realtor's the same.
This
right?
is true.
And so,
Realtors generally are great, but some specialize in certain areas
Yes.
and some specialize in other areas.
So I think it's important, when, if you don't, like, let's say your friend is a realtor, like, be sure to ask them, like, are you comfortable doing this kind of real estate? If somebody asked me to help them with a land assembly, I would call you because it's not my wheelhouse, right? And so I think, making sure that whoever you talk to, you feel confident that they can handle this because
Absolutely.
not everybody can. I think it would be the same if, someone wanted to buy a rural property. You would want to talk to the agent that knows about, farmland and agricultural land, and there are rules and
Lots of them.
lots of them.
Yes.
And so I think the same thing. You definitely want to talk to someone who has that commercial experience. If it's a land assembly, you want to talk to someone who has that investment experience if it is for an investor situation. So that's really good. Okay. So quick fire questions for you, like the first thing that comes to your mind kind of a thing here. So I'm going to ask you some questions and tell me what you think.
Okay.
So what's one misconception about land assemblies or investment buying?
Just one?
Oh, interesting. Okay, well, tell me.
A misconception is that everyone's going to, make significantly more money than what the property's
Okay.
worth. Like that is probably the number one misconception, where you do get, a bit of a lift
Yeah.
potentially over what it would be worth on a retail value, but it's not always going to be that way, especially depending on the market circumstances. So that's probably the biggest one at the moment is that, it's a land assembly. You're making out like bandits.
Right.
Not necessarily the case.
Right. Or if it's an investment, maybe you bought it in a quieter market or when there was more inventory, and so you got to choose and you didn't have to overpay or you didn't go into multiple offers, and so you're it's nothing but up from here because you bought it low, but then the market says otherwise, or
Well, it's
maybe
true.
you have to sell it in an emergency time frame where the market's not great
That's right.
and you lose.
And one of the things with land assemblies as well, like when land assemblies are really going fast, you then have to buy in a market which the rest of the market's also going fast. So
Right.
for you to be able to find the property that you want to move into
Yeah.
is also that other consideration. It's not just woohoo, I got tons of money, and then
Yeah.
you go look at a couple properties and you're like, this is how much?
Yeah.
Oh,
Yeah.
maybe this wasn't the best move for me to make or something like that. So
Exactly,
you just
yeah.
need to make sure that you're looking at your next move, not just, the
Right.
dollar figure on the one you're selling.
Right. They're not always wins.
They're not always wins.
Yeah. Yeah.
Most of the times, if you got a good, a good investment focused realtor that can walk you through that, you should walk out with a win. But
Yeah.
It's
And I would think too, the real estate advisor would reach out to you, periodically and say, this is where your property's at right now. Like, after you've purchased it, maybe a year or so later, this is your value now. And then kind of get in touch with you regularly to keep you kind of on top of that,
Yep.
which I
Absolutely.
think is really important.
Yep,
Yeah.
for sure.
Okay. What's one thing you wish all buyers knew before jumping into this kind of purchase?
That it's not simple, it's not glamorous, and there will be problems along the way. None that are insurmountable, but there's going to be stuff that comes up that's going to come out of left field, and you're going to go,
Yes.
oh, I didn't think about that, or I didn't know that was going to happen, or, we just completed on this condo that I was bought for my daughter to go to university, and all of a sudden now they're wanting $25,000. Why didn't I know that? Because there's a roof that needs to be done in the building.
Right.
So things like
Yeah,
that can happen. Things
Totally.
will come up.
Yeah. So yeah, just be prepared for
Be
that.
prepared.
Yeah. Good. Okay, this is a funny one. If buying investment property were a sport, what would it be and why?
Oh, if it was a sport.
I always like to trip you guys up. a
Yeah.
little.
I would say it's full contact football.
Oh,
Yeah, because I mean, in a hot market, you got to come in there with your, absolutely
Your
full
shoulder pads
blast shoulder
on.
pads and bully your way through
Yeah.
sometimes to get it. In a slower market, you have to be prepared to, finesse that, Hail Mary pass to get the, get the deal done.
Line up the kick just right,
Just
so
right.
it goes right through the goal post just properly. Yeah, that's really good. That's a good analogy. Amazing. Okay, so I think we have realized that investment. I think a lot of people they watch home and garden television, and they see these people, and that's another thing too. Actually, before we kind of move on, some people buy investment properties with the idea of, I'm going to flip this. You see so many of these flipping shows on home and garden television. I think that's where I was headed there, was like, that is also not glamorous. Like, the things that you see on TV are like really not the case. And so what would you say to someone who's got that in mind?
As someone who actually does know some of these HGTV stars as well, and have met them and talked to them regularly.
Right.
The one thing that this one in particular always says is like, it doesn't all get done in between the commercials, guys. Like, this is actually hard work. It takes a lot of hard work, and a lot of things with these flipping shows and stuff like that. There's a lot that goes into it in between the scenes, and the governments also, for whatever reason, don't seem to like it at the moment. So there's been an anti-flipping tax that the federal government has implemented. There's also been an anti-flipping tax that the British Columbia government has implemented as well, because they've seen this as a, somehow creating this upward pressure on market prices.
Right.
I don't think that's actually the reason for it. The reason for it is we don't have enough inventory, and that's been stymied by not being able to develop fast enough in order to do it. So that's kind of the municipal level, but the federal and provincial government always like to try and, well, this is going to fix the housing problem.
Yes.
So
Yeah.
they implement it. So that kind of has put a bit of a damper on flipping and stuff like that.
Yeah.
But honestly, you take an old decrepit house in Oak Bay that someone's lived in for 75 years, and you turn around and you renovate it and you turn it into something people want to live in, but you're getting penalized to doing that.
Yeah.
So let's leave it falling down, and
and nobody
just
can live in it.
It doesn't make any sense.
No,
but
it doesn't.
Anyway.
Yeah. No, that's very true. But that is our current reality.
It is.
And so, maybe some people don't even realize that. And again, when we watch these shows on TV, those shows could have been taped 10, 15 years ago, and they're on reruns.
Totally.
And so understanding, the current dynamic of what's going on out there, it's not as simple. Some people will say, well, I live in Ontario and I'm going to buy a house in BC that I'm going to live in eventually, and maybe they rent it out or they just leave it there. There's vacancy taxes. There's all kinds of things,
all kinds
right?
of things, yeah.
So really a good, thorough understanding of it's not going to be...
Totally.
Yeah.
There is, especially with a lot of investors and HGTV people and stuff like that, where they talk about investing where the returns are the best.
Yeah.
And you have to look at, what is the return you're looking for? Is it monthly cash flow? Because honestly, in some markets in Canada where you can buy a property and you can cash flow monthly, maybe you're making $200 a month, $300 a month, but the appreciation of those properties don't necessarily do anything. They basically stay, it was worth $200,000 today, it's worth $205,000 10 years later.
Yeah.
So you've gotten this little bit of cash flow. But in other markets, Vancouver, Toronto, Victoria, typically you're going to have no cash flow, or maybe you're actually putting $150 a month out of your pocket into it, just like you would a mutual fund. But your appreciation after 10 years, you might have grown 40%.
Right.
So your returns at the end of the day, not in the day-to-day.
It's a slow burn. Yeah. Good.
So you just have to put that into your calculations.
Right. Yeah. Amazing. Matthew, I think this has been a great conversation. I think, definitely we don't want to discourage people from investing, because I think at the end of the day, it's a positive move for 100%. People. I feel like, it's good for us to open people's eyes to the dynamics of it and to do it strategically in order to ensure that you're kind of in it for the long haul. So do it the right way, understand the tax implications. And
one of the things I will mention too, like real estate investing, and I know it has a bad name out there sometimes in certain circles, but we're actually providing, like, real estate investors are out there providing housing for people, and they say we need housing for people. And if you're out there investing, it creates a unit for someone to buy, which then creates a unit unit for someone to be able to live in.
That's a
and
win.
I think that's a hugely important thing, especially in tight markets like Victoria, Vancouver, Toronto, even Edmonton and Calgary right now. Like, you're actually providing a service to those people, whether they think you are or not.
Yeah.
You actually are, because the other option is government builds all our houses for us and we live in government housing, which isn't necessarily what people want to do.
It's not ideal either. Yeah. No, that's great. That's a very good point. And so, I think understanding the whole, whether it's land assembly, whether it's investment properties, I think, more people should do it. And I think this has shed some good light on that. And I think people should call you if, they need some help in this capacity. You are the guy that kind of knows. And, I know you've been kind of going through this personally with your own property and whatnot.
Yes,
so, there's nothing like living it in real time.
It's true. Like, I mean, my wife and I bought a piece of property 7 years ago in the effort of trying to create more housing for people and affordable housing for the people in the area. So we bought an acreage, and our goal was to build some townhouses. Well, it turned into that goal. We were going to subdivide it into single family houses, and then the municipality at one point said, "Oh, we like to see higher density." So we thought, "Oh, well, let's make this a development that people actually want to live in and can afford it." And it took 7 years to get it rezoned.
Wow.
And that's just to rezoning. So,
wow.
Yeah.
So that really is the long game.
It really is the long game. So it's what I'm saying. It's worth it at the end of the day, but you have to know that it's a long haul process. But hopefully there'll be families being able to move into this property at some point in the future. So
and hopefully we'll see more of that too.
Absolutely.
As more people, hear this message, and the buzzwords are housing crisis, and and here we are with the ability to invest and make more units available for people.
Absolutely. Well, that's what it's all about.
Important.
Yeah.
Yeah, that's so good. Well, Matthew, thank you so much for your time today. We really appreciate your time. Thank you for tuning in with us today at the Red Chair Podcast. We hope you found it helpful. As I said this earlier in the segment, please do not forget to like and subscribe, and you will get future episodes of the podcast as well. And we hope that you have found some value in this. Matthew's information is available alongside of the podcast. So if you've got further questions or you want to strategize with him about some things you've got going on in your mind, reach out to him. He's available to you. And we wish you well, and we will see you next time on the Red Chair Podcast. Bye for now.